Hi, I am Anna. I come from www.ntvforex.com. Central banking cartel promises ZIRP until at least 2023. Analysis http ntvforex.com. News ID B74EDC 9/18/2023 25:09 p.m. Gold and silver investors NBSP who were hoping Wednesday's FOMC meeting would be a catalyst for a major breakout move were largely disappointed. NBSP. The metals complex did not see an immediate boost from the Federal Reserve's dovish policy meeting. Still, the central bank's commitment to an accommodative monetary policy is set to play out not just over the course of a week, but of years to come. NBSP. On Wednesday, the Federal Reserve announced it would continue to hold its benchmark interest rate near zero. That came as no surprise. NBSP. However, the extent of the Fed's commitment to avoid any rate hikes in the future raised the eyebrows of many veteran observers of monetary policy. Not only did members of the central banking cartel vow to keep rates down for the remainder of the year, they also signaled there would be no rate hikes in 2021. But they went even further than that. All voting members with the exception of one pledged to keep interest rates near zero through 2022. And a majority voted to maintain current interest rate policy at least until the end of 2023. Fed's 0% interest rates as far as the eyes can see. Yahoo Finance report. The latest FOMC meeting has reassured markets that there is no chance for a rate hike for at least 2 years. The Euro-dollar futures market, which trades out much farther than the federal funds futures market, is forecasting a 25 basis point rate hike Indiana mid-2024. That shows that the market is currently expecting the negative effects of the pandemic to linger and hurt the economy for many years to come. Yahoo Finance analyst NBSP. Now, the Federal Reserve codifying that in the statement today, committing to keeping interest rates at that level until labor market conditions have reached levels consistent with the committee's assessment of maximum employment and inflation has risen to 2% and is on track to moderately exceed 2% for some time. No economist or market guru on the planet has a crystal ball that can tell them what the GDP or the unemployment rate or the inflation rate will be 3 or 4 years from now. But apparently Fed officials think they are smart enough to see that far into the future and are able to know today what the optimal interest rate will be then, that is, effectively zero. The truth is that all they know how to do is react to signals given to them by markets, politicians, and banks. NBSP. If the repo market freezes up or stocks on Wall Street tank, they roll out more stimulus. NBSP. If the government needs to expand its borrowing capacity by trillions of dollars to finance deficits, then they commit to buying more treasuries. NBSP. If the leveraged financial system requires more inflation to eat away at the real value of otherwise unpayable debt obligations, then they commit to depreciating the currency at a more rapid pace. NBSP. The Fed is continuing its $120 billion per month quantitative easing program, which has ballooned its balance sheet to more than $7 trillion. And it won't turn off the monetary spigots until government-measured inflation rates exceed 2% over some unspecified period. NBSP. An inflation rate above 2% with interest rates remaining well below that level would be a hugely bullish driver for precious metals markets. According to the World Gold Council, in years when the inflation rate has exceeded 3%, the NBSP price of gold NBSP increased 15% on average. Gold and silver do not merely keep pace with rising inflation. They tend to hugely outperform it. Of course, if there comes a time when the Fed is forced to aggressively hike rates above inflation to bring it back down, then the metals can suffer outsized declines. An environment of positive real interest rates and declining inflation rates do not appear to be something metals investors will need to worry about anytime soon, and probably not for the next few years. There will be inevitable volatility along the way, but it's hard to see anything but a continuation of the major bullish trend going forward. The coronavirus lockdowns were certainly a catalyst for a surge in physical buying this year. Even though bullion market conditions have since settled down, sales of coins, rounds, and bars continue to far outpace those of a year ago. NBSP. We are eyeing the upcoming election as the next potential catalyst. With polls tightening between President Donald Trump and former Vice President Joe Biden, fears are growing over a contested election that could drag on for weeks. NBSP: an expected torrent of mailed-in ballots could overwhelm state election systems. The backlog could spark highly charged fights in the courts and on the streets over which ballots get counted and which ones get thrown out as late, incomplete, or fraudulent. NBSP: if there is anything sure to rattle markets, it's uncertainty. During uncertain times, when the only thing that can be counted on from the authorities is to keep printing currency, precious metals provide a rock-solid and necessary counterbalance to conventional risk assets. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. AUD USD Weekly Forecast Upbeat data overshadowed by scared central bankers analysis. http ntvforex.com. News ID 09234918 2023 18:49 PM. Australia managed to create 111k new jobs in August, despite the Victoria lockdown. The US Federal Reserve joined the wait-and-see club. AUD USD holding on to its long-term bullish trend around 0.7300. The AUD-USD pair is trading around the 0.7300 level, unchanged for a second consecutive week, despite there were quite a few headlines that could have spurred action. Somehow, the lack of action across the FX board reflects a similar behavior among central bankers. This past week was the turn of the US Federal Reserve, which, as widely expected, kept rates at record lows near zero, and formalize the new framework focused on targeting average inflation. And while policymakers left the doors open for further easing, they showed that they are in no hurry to increase facilities, instead passed the ball to fiscal authorities. The FED's stance was quite similar to that of the RBA, which met earlier this month. A modestly optimistic upgrade of the economic outlook, covered with a good dose of uncertainty and linked to the pandemic developments. Policymakers from around their world pledged to keep supporting the economy but refrained from making new announcements for the near term. Data remains below pre-pandemic levels. Political tension in the US, as elections loom, combined with an uneventful Federal Reserve. Equities remained under pressure, although at least US indexes did not extend their slumps. Wall Street kept Aussies gains, alongside gold prices, which continue to trade at the lower end of their latest range. NBSP gold buyers hit the brake as central banks halted the provision of easy money. Good news in Australia fell short of boosting the Aussie. According to the official release, the country added NBSP 111k new jobs in August, while the unemployment rate fell to 6.8%, beating expectations, despite the lockdown in Victoria. In the region, however, 42.4k lost their jobs. NBSP also, coronavirus cases in the country continued to ease, which lead to a lift to the travel cap for citizens abroad. NBSP: with the success we have had as a country in recent months, we can start opening up again and we can start helping Australians getting home again, Prime Minister Scott Morrison said this Friday. NBSP: the country has reported 48 new cases this Friday, 45 of which are in the mentioned Victoria region. As of today, coronavirus cases in the country total 26,861, with the death toll at 837. Chinese data released this past week was also upbeat, as industrial production increased 5.6% in August, while retail sales in the same month rose 0.5%, beating expectations. Yet as it happens globally, macroeconomic figures show that economic activity remains well below pre-pandemic levels. The upcoming week will be quite light in terms of macroeconomic data, as Australia will only publish the preliminary estimates of the September Commonwealth Bank PMIs. Manufacturing activity is seen falling again into contraction territory, as the index is foreseen at 48.3 from 53.6, while services output is expected to have shrunk further, down from 49 to 48.3. The US, on the other hand, will see FED's Chief Powell testifying before the Congress, the September preliminary market PMI and August durable goods orders. NBSP AUD/USD Technical Outlook. The AUD/USD pair retains its long-term bullish potential intact, according to the weekly chart. For a third consecutive week, the pair is above its 200 SMA, while the 20 SMA has crossed above the 100 SMA, both well below the larger one. The RSI indicator keeps consolidating near overbought readings, while the momentum indicator has picked up within positive levels, after correcting extreme overbought conditions. Daily basis, the pair has continued developing above a mildly bullish 20 DMA, while the larger ones keep advancing below it. Technical indicators, however, lack directional strength, the momentum within neutral levels and the RSI around 57. The bearish potential seems quite limited due to price behavior and despite easing indicators. A relevant support level is 0.7190, followed by the 0.7100 figure. Given the persistent $S weakness, it seems quite unlikely that the pair could fall below this last. Resistances for the upcoming days stand at 0.7350 and 0.7413, the high set this September. AUD/USD Sentiment Poll. The NTV Forex Forecast NBSP poll. NBSP suggests that bulls hold the grip, as most polled experts see the pair advancing next week with an average target of 0.7322. Buying interest eases in the monthly and quarterly perspectives, as bears are a majority in both cases, although in both cases, the pair is seen around 0.7200 on average. The overview chart shows that, while moving averages have lost momentum, the bearish case remains weak as slopes are neutral to bullish. It also shows that the number of experts betting for sub 0.7000 levels have continued to decrease, while there is quite an increase of higher possible targets, in line with an advance towards the 0.75-0.76 price zone. NBSP-related forecasts. Gbpusd Weekly Forecast. Boris Brexit climb down insufficient to keep pound afloat. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. China economic recovery is broadening. Analysis http://ntvforex.com. News ID 509BBB 9/18/2023 17:27 p.m. China's economic dynamics continued to improve in August 2020. As seen in our monthly pulse, the expansion of the blue area compared to the dotted area shows a more widespread recovery in activity. Whereas the improvement since March was initially driven by the rebound in industrial production and investment in public infrastructure and real estate, it has now reached other parts of the economy. Activity indicators have picked up in industry and services. Regarding demand components, investment has continued to strengthen and exports saw a solid bounce back in July and August, up 8.4% YY in value terms. Even the value of retail sales reported slightly positive growth in August, 0.5% year-on-year for the first time in 2020. However, retail sales were still down in volume terms 1.1%, and well below their 2019 level over the first 8 months of the year, 8.6% YY. Online retail sales have continued to make ground. The return to normal levels of activity in a large number of industrial sectors therefore seems to be complete. However, the shock due to the COVID-19 epidemic has severely damaged the financial situation of many corporates, especially micro-enterprises and SMEs and NBSP households, and this could continue to weigh on private investment and consumption. Consumers remain very cautious, notably due to health risks and labor market trends. The unemployment rate calculated by the NBS on the basis of survey data rose abruptly from 5.3% in December 2019 to 6.2% in February 2020. It has fallen again since March to 5.6% in August but remains unusually high. Moreover, this rate is likely to underestimate this year's deterioration in the labor market. First, it measures only urban unemployment, and second, it does not take into account a large share of the migrant workers who lost their jobs during the lockdown period. Download the full Echo Week. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. U.S. monetary policy goes inclusive analysis http://ntvforex.com News ID 1/8F99/18/2023 16:25 p.m. Over the past 10 years, fostering inclusive growth has moved higher up the agenda of governments, international institutions and, increasingly, companies. Under Chairman Powell, it has become a key topic for the Federal Reserve through the focus on the heterogeneity of the labor market situation of different socio-economic groups. It has led to the view that preemptive tightening based on a declining unemployment rate is unwarranted. On the contrary, it may very well stop people from finding a job. It will be interesting to see whether other central banks and in particular the ECB in the context of its strategy review, will follow in the FTSE's footsteps. Inclusive growth can be defined as a growth that is both sustainable and broad-based in terms of employment opportunity. SA 1. Over the past 10 years, fostering inclusive growth has moved higher up the agenda of governments, international institutions and, increasingly, companies. Under Chairman Powell, it has become a key point of attention of the Federal Reserve. Powell's introduction to the press conference following the latest FOMC meeting perfectly illustrates the focus on the heterogeneity of individual situations. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, the high level of joblessness has been especially severe for lower-wage workers in the services sector, for women, and for African Americans and Hispanics. This focus was also an integral part of the FTSE's strategy review. To this end, between February and October 2019, a large number of Fed list-and-saw meetings have been organized throughout the United States, allowing a cross-section of American society to express views on the economy, inflation, monetary policy, etc. 3. The insights are fascinating to say the least and reveal the gap between theoretical concepts like the Phillips curve or the natural rate of unemployment and the reality on the ground. Participants wondered why the labor market was characterized as a HOTA while in their own communities unemployment remained structurally high. Business representatives explained they had developed training programs to cope with recruitment difficulties in a tight labor market. Interestingly, raising wages was not considered as a means of attracting and retaining workers. Rather, the emphasis was put on training programs, health care, or other benefits. Another striking observation was the fact that inflation was less discussed than the labor market. Against this background, the change in the longer-term strategy of the FOMC is all the more understandable. A robust job NBSP market can be sustained without causing an outbreak of inflation. To put it technically, when the Phillips curve is flat, a decline in the unemployment rate is insufficient a reason to tighten monetary policy because this decline does not convey information about the future development of inflation. The central bank can afford to wait before tightening policy. In the old days, when the Phillips curve was upward sloping, rate hikes were preemptive. Alan Greenspan's preferred metaphor was that of bringing an oil tanker to port, a maneuver which needs to start well before seeing the harbor. Now, monetary policy can be reactive with central bankers waiting to see a sufficient pickup in inflation before getting into action. Download the full Echo Week. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. China app ban roils marketks analysis http://ntvforex.com News ID B29DC5918-2023 11:53 p.m. Friday. AS early calm has been shattered by the U.S. decision to ban some Chinese apps, with tech stocks taking the brunt of the losses. NBSP Trump moves to bank TikTok and others stock market weakness points towards a possible change of White House resident in November. Gold edges up as US-China tensions rise. The atmosphere across stock markets is turning sour as the weekend looms, as investors fret about possible retaliatory measures from China after the US announced a ban on key apps from Sunday. Such a move opens an entirely new dimension to the US-China standoff, and puts major tech firms squarely in Beijing's sights, as the two powers seek out their opponent's weak spots. US markets have struggled to hold their ground all week, and as the week comes to a close it looks like more pre-election losses are in store. The Nasdaq continues to lead the losses for US markets, which is a very negative sign for equities in the near term. Such an absence of risk appetite flags the potential for a much bigger drawdown as the election nears, which would conform to the normal pattern for election years, and also suggest that the Republicans are on course to lose the White House. At least gold has benefited from the outbreak of risk aversion, recovering $1,950 and marking a continued rebound after the sharp losses of Wednesday and Thursday. The safe haven has continued to see inflows in recent weeks, giving it a foundation to push back towards $2,000 and the highs seen at the beginning of September. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Consumer sentiment is improving. Analysis http ntvforex.com. News ID 7DDE3C918-2023 10:55 p.m. Consumer sentiment picked up in early September as perceptions about the economy improved. Confidence still remains well below its pre-virus level, but it moved in the right direction in September. Sentiment rebounding. The University of Michigan's Consumer Sentiment Index rose to 78.9 in September, marking the highest reading since March. Both current conditions and expectations improved. Notably, just 16% of consumers, the smallest proportion since 2015, expected the economy to worsen over the next year. Sentiment remains way below its pre-virus level, but notably it hasn't tested the lows visited in the aftermath of the 2008 crisis. Keeping an eye on household finances. Perception of finances were influenced by declining incomes, with more respondents reporting an income decline rather than gain for the first time since 2014. Lower income households reported a decline more frequently, likely reflecting the expiration of supplemental jobless benefits. With much hand-wringing over if dwindling stimulus would weigh on spending, perceptions of finances clearly took a hit, but overall sentiment remains buoyant. Download the full economic indicators. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gbpusd Weekly Forecast. Boris Brexit climbdown insufficient to keep pound afloat. Analysis http ntvforex.com. News ID 7E991C918-2023 09:41 p.m. Gbpusd advanced on hopes for a Brexit compromise but suffered from the Fed. A critical vote in Parliament, UK PMIs, and US figures are eyed. Late September's daily chart is painting a mixed picture. The FX poll is pointing to a bullish outlook in the short and medium terms before a fall later. Boris gave, Powell took it away. A UK Prime Minister Boris Johnson agreed to compromise on the controversial Brexit bill and sent the pound higher before the Federal Reserve boosted the dollar. Politics are set to outweigh economic figures in rocking the pound in the last full week of September. NBSP this week in Gbpusd. Brexit hopes versus Fed fallout. Brexit. The controversial internal markets bill passed its first hurdle in the House of Commons, initially sending down the pound. The legislation knowingly violates the Brexit withdrawal agreement that PM Johnson signed with the EU last year. Investors feared that negotiations would imminently collapse. An insufficient amount of Conservative Party rebels voted against the bill. However, the PM later reached a compromise with these rebels, agreeing to grant Parliament a greater oversight role over applying the law. The news NBSP pushed the pound higher, although Brussels has yet to respond. It seems that EU officials are waiting to see the text of the modified Bill A or perhaps holding their criticism before it turns into law. NBSP on the other hand, Chief EU negotiator Michel Barnier said there is a glimmer of hope on the politically sensitive fisheries issue, providing support to sterling. Moreover, European Commission President Ursula von der Leyen said she is convinced a deal is still possible. NBSP then came the central banks, both downing the cable. The Federal Reserve signaled it would leave rates unchanged through 2023 but refrained from offering any imminent support despite conveying a message of concern and uncertainty. According to the Fed's projections, the bank now expects a softer than previously estimated contraction in 2020, but also a shallower recovery in 2021. Jerome Powell, chairman of the Federal Reserve, seemed to throw the ball into lawmakers' court without acting. Stocks dropped and the safe haven dollar advanced. Indeed, the chances for additional fiscal stimulus have risen after the U.S. reported weak retail sales figures for August. Reports on Capitol Hill suggest a package worth $1.5 trillion is cooking. Contrary to the Fed, the Bank of England does intend to act potentially by setting negative interest rates. The minutes from the BOE's meeting revealed that the bank is testing the effectiveness and the implementation of such a move. Sterling dropped sharply on the news. The BOE also expressed worries about the economic outlook amid Brexit uncertainty and the rise in virus cases. Cases are on the rise in the UK, prompting new restrictions in the northeast. Fortunately, mortalities remain at low levels, at least when comparing to the US. Source FT UK data was mostly upbeat, with jobless claims rising by 73,700, less than estimated, while headline inflation rose by 0.2%, also above expectations. The unemployment rate edged up to 4.1% in July, as expected, yet that hinges on the ongoing implementation of the furlough scheme. NBSP UK events Brexit vote, PMIs as recent volatility has shown, sterling is becoming more sensitive to what will NBSP happen NBSP after the Brexit transition period expires at year-end. Parliament is set to approve the Internal Markets Bill during the week, and markets will focus on the EU's response. If talks collapse, the pound would tumble, while attempts to reach a compromise would boost it. BOE officials may have the chance to clarify their intentions in Westminster hearings or interviews. How determined are they to set negative rates? How close is the move? The pound may rock on any hint from Governor Andrew Bailey, who has scheduled speeches, or any other member of the Monetary Policy Committee. NBSP Rishi Sunak, the Chancellor of the Exchequer, has yet to announce what would replace, if at all, the furlough scheme which expires next month. The spectre of mass UK layoffs is worrying about the nation and markets. A gradual tapering of the scheme is likely, but without details, sterling could suffer. The longer and the more generous the gradual retreat from the program is, the better for the economy and the currency. Market's preliminary purchasing managers' indexes for September are projected to show an ongoing recovery, with statistics for the services and the manufacturing sectors printing well above 50 points, firmly in growth territory. Any slide toward this break-even level could show investor fear and result in a weaker pound. NBSP. Here is the list of UK events from the NBSP NTV Forex NBSP calendar. US events. Politics take center stage. The Fed already announced its last pre-election decision, yet Chairman Powell may still move markets via public appearances, and so can his colleagues. Hints about expanding the bond buying program may boost markets and weigh on the dollar, while urging elected officials to agree on fresh relief would weigh on stocks and boost the safe haven greenback. NBSP. At the time of writing, Democrats and Republicans are still playing the blame game and don't seem to get any closer to an accord. However, a group of moderate self-proclaimed problem solvers may present a deal that the party's bigwigs may eventually accept. The larger and the faster a deal arrives, the better for equities and for Gbpusd. Ongoing accusations could weigh on cable. The bigger political battle is for the White House. While President Donald Trump has somewhat narrowed the gap in national polls, Biden looks stronger in several critical battleground states. According to 538, he has a 76% chance of replacing the incumbent. NBSP source 538. The Economist's model shows better chances for the Democrat, 86% at the time of writing. Both models have hardly changed in recent weeks and seem to show that the conventions had little or no effect. Source: The Economist. Markets fear a contested election in which Trump declares victory on election night, ahead of the slow count of mail-in ballots. Later, Biden could be declared the victor, but Trump would call it a fraud. A constitutional crisis would significantly hurt business and consumer confidence. NBSP. Growing fears and tensions ahead of the first debate on September 29 could weigh on markets and boost the dollar. On the data front, several housing figures are of interest during the week, yet the most significant publication awaits traders on Friday: durable goods orders for August. Has the lapse of government aid weighed on investment? That is an open question. Continuing claims for the week ending September 11 are also of interest, as that is when the non-farm payrolls surveys are conducted. NBSP. Overall, battles on fiscal stimulus and for the White House are set to dominate, with economic releases playing only second fiddle. NBSP. Here the upcoming top U.S. events this week. Gbpusd technical analysis. Pound-dollar continues suffering from downside momentum on the daily chart and has failed to top the 50-day simple moving average. However, it bounced off the closely watched 200-day SMA. The relative strength index is balanced and the general picture is mixed. The 1.30 level remains a critical battle line, especially as it converges with the 50-day SMA and after serving as a double bottom. The next line to watch is 1.3060, which worked as support in mid-August, and it is followed by 1.3170 and 1.3250. Support awaits at 1.2980, a swing low seen twice in September, and then by 1.2805, June's high. Next, 1.2765 was September's low, and 1.27 is next. NBSP. Gbpusd sentiment. NBSP. With plenty of time until the Brexit deadline, a deal is unlikely to be struck soon, which has weighed on the pound. Rising U.S. political tensions could boost the dollar. Overall, there is room for the cable to fall. The NBSP NTV Forex forecast poll. NBSP shows that investors are seeing a moderate uptrend in the next week and cable topping 1.30 in the next month. However, they are somewhat bearish on the long-term move. While the short-term target has been upgraded, it seems that experts are waiting for further developments before changing other targets. Related reads: how central bank inaction turns to action in currencies and what's next for markets. 2020 elections: how stocks, gold, dollar could move in 4 scenarios, nightmare 1 included. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. France. An overview of the recovery plan analysis. http://ntvforex.com. News ID A9B0479182023 061 PM. 100 billion euros is a huge sum, and that is how much the French government will devote to its recovery plan over the next 2 years. The overall budget is divided roughly into thirds to cover the recovery plan's 3 pillars: 30 billion euros for the environment, 34 billion euros to boost competitiveness, and 36 billion euros for social cohesion. The stakes are high. The goal is not only to stimulate short-term growth with GDP targeted to return to pre-crisis levels by 2022, but also to strengthen medium to long-term growth and build today the France of 2030. This is why the accent is on supply-side measures rather than on demand. Large corporate support also reflects the cost of the crisis, which has hit companies harder than households. It comes in various shapes and sizes: production tax cuts 10 billion euros, a strengthening of shareholder equity 3 billion euros, incentives to relocate production back home 1 billion euros, and funding for innovation and investment in the technologies of the future 11 billion euros. The recovery plan also provides support for households, mainly in the form of job support measures, which in turn goes through support for businesses. The loop is closed. Supply-side policies also help stimulate demand. As is often the case, employment is the pivotal variable and, in fact, it lies at the heart of the recovery plan. Indeed, employment is not only bolstered via corporate support under the competitiveness pillar. Other more direct measures are also designed to support employment as part of the social cohesion pillar, including subsidies for hiring youth nearly €4 billion, a new long-term job retention scheme nearly €7 billion, and greater investment in training €5 billion. Measures to advance the ecological transition are also expected to have a positive impact on jobs. In brief, as we see it, the recovery plan plays two roles. It buffers the scars of the crisis and it strengthens the current recovery as well as tomorrow's growth. It remains to be seen whether it will be fully effective, both in the short term and in the long term. We must hope so. It seems likely, but it's hard to say for the moment. Indeed, uncertainty is high as several questions remain unanswered, like how quickly will the €100 billion be injected into the economy. The decision to emphasize supply-side measures has its risks, too. More visible and immediate support for demand might be considered. The government has not spelled out the financing of the plan, either. Further details are expected in late September, when the government presents the 2021 budget. Thanks for watching. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Banks and travel stocks weigh on the FTSE analysis. http://ntvforex.com. News ID 9F2FE4918-2023 041 PM. Europe. It's been a subdued end to the week for markets in Europe. However, for all this week's choppiness, we've still managed to hold on to most of last week's advances, with the DAX managing to eke out a small weekly gain. Travel and leisure stocks have come under renewed pressure again today on the back of reports that we could see new lockdowns, quarantines and curfews, with NBSP IAG and EasyJet NBSP leading the fallers. Ryanair has also taken the decision to cut its October capacity by 20% due to the constant changes in travel restrictions by European governments. Hotel stocks have also fallen back, with Holiday Inn owner Intercontinental Hotels also under pressure, along with Premier Inn owner Whitbread. Rolls-Royce shares have also remained under pressure in NBSP the wake of this week's reports that it may issue new debt or equity, given the difficulties in raising funds quickly any other way. The continued reduction by airlines to their flight schedules puts more pressure on Rolls-Royce cash flow as they get paid in line with how much time aircraft are actually in the air. Yesterday's renewed talk of negative rates is continuing to make itself felt in the share prices of UK banks today, with Metro Bank and Virgin Money sliding well over 5%, NatWest Group sliding below 100p to a record low, and Lloyds Banking Group sliding below its lows this year at 25.5p, to levels last seen at the beginning of 2012. If the Bank of England had been intending to cut the legs out of the UK banking sector this week, with their talk of negative rates, they couldn't have picked a better way to do it. It is also being reported that HSBC is looking to cut most of the jobs in its Paris office in equity and structured products. London Stock Exchange NBSP shares are also in focus on reports that it is now in exclusive talks with Euronext over the sale of its Borsa Italiana business, as it looks to clear the way for regulatory approval for its Refinitiv deal. Sainsbury's shares NBSP saw a big rise yesterday and have seen further gains today on reports that Daniel Kretinsky, a Czech billionaire, who already has a stake in Royal Mail, had taken a 3% stake in the business. It is not immediately clear what plans Mr. Kretinsky has for Sainsbury with his decision to make this investment, however it probably won't be too long before he makes his presence felt. South African wealth and fund manager NBSP Investec latest trading statement. NBSP has seen its shares slide back after the company announced that its profits for the half-year were expected to be over 50% lower from the same period last year, largely as a result of a weaker South African rand, and reduced client activity. The company also said it would be cutting 210 roles in its London office. US markets opened modestly higher as the sell-off in tech stocks once again appears to have taken a pause just above some key support levels, on the S&P 500 and Nasdaq benchmarks. US banks have joined the sell-off in financials after the US Federal Reserve announced a new series of stress tests for the sector, the results of which will be known by the end of this year. The central bank is also considering extending the ban on issuing dividends, and conducting share buybacks, though the weakness being seen in US banks is not anywhere near the scale we are seeing in European financials today. Oracle shares have also slipped back a touch after the US Commerce Department said it will block US users from downloading TikTok or WeChat from 20th. NBSP September Beyond Meat shares are also on the back foot after being on the receiving end of a downgrade from JP Morgan. FTSE has been a difficult week for the US dollar, after 2 weeks of modest gains, as concern about the U.S. recovery continues to grow. The inaction of the Federal Reserve, along with a rise in the Chinese yuan and the Japanese yen this week, has kept a lid on any further gains in the greenback. Currency markets have painted a confusing picture for risk this week, with the Japanese yen the best performer over the last few days, suggesting that investors are becoming increasingly nervous about the outlook. Yet the pound has also performed well against the US dollar despite a week that has seen UK and EU trade talks continue to remain fractious. Commodities oil prices are on course for their best week since June, with Brent prices edging back towards their 200-day MA, after the Saudi energy minister warned rather darkly of betting against a further recovery in prices, while rebuking those who tried to get away with pumping too much. The fallout from Hurricane Sally is also helping to support prices. Gold prices have remained fairly well supported, edging higher this week, as concerns over an increase in coronavirus cases weighs on the prospects for the continued rebound in economic activity. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold fundamentals meets market dynamics, consolidation in play at all-time high. ntvforex.com news ID B01BC1 3 minutes ago by Ross J. Berland. Gold fundamentals underpinning the move, but many obstacles. NBSP could now come into play. With yields sinking lower, real rates continue to make new lows and the US dollar is not in favor. NBSP The price of the yellow metal ran up an all-time high at the start of the week, extending what has been a remarkable rally in the months of June and July of around 16.5%. Sinking US yields, mass stimulus and liquidity have been the main contributors to precious metal strength. NBSP The stars are aligned for gold prices and a test of the psychological level of $2,000 is within reach now, analysts at ABN NBSP AMRO argue, offering several reasons for this. Firstly, since the start of July the US dollar has declined. Secondly, central bank policy is a strong driver behind higher gold prices. Thirdly, in a number of countries there are negative rates, official and or government bond rates. Fourthly, the US may not have negative official rates or government bond yields, but nominal rates corrected for inflation expectations, real rates are in negative territory. Fifthly, governments have embarked on large-scale fiscal stimulus to support the economy. NBSP Finally, the technical outlook is positive. However, while we are seeing higher stocks and gold at the same time, this may not stay that way, for there are plenty of reasons out there to jolt investors' risk appetite, from US elections, trade wars, the coronavirus to name a few. Not all are bullish. Best, not for the short term at least. The markets are banking on inflationary pressures. However, NBSP there is also some reserved NBSP scope and the argument for deflation for which gold does not hedge against. In a risk-off environment where the US dollar attracts a surge of demand again, the substantial all-time high NBSP long positioning in gold could come crashing down in higher volatility once again. NBSP: if the prior price action and correlation to falling stocks and gold prices is a playbook to go by, then Wall Street NBSP is where we will see the volatility signs first. We still expect a sizable correction in gold prices in a risk-off environment when the dollar is back in favor. It is likely that this correction will be short-lived and be a buy on DIPs for investors eagerly waiting to step in. After such a correction, prices could rally again. NBSP: it is likely that gold prices will test $2,000 per ounce in the near term. But we still expect some profit taking after that, analysts at ABN AMRO said. A stock market crash could be the NBSP canary in the mine. NBSP for committed gold bulls and portfolio managers who will be first to square gold positions to pay for margin calls elsewhere, pressuring the gold market. NBSP: if then, the inflation hedge is stripped out, gold will be left to pick up the pieces of safe haven flows eventually once again. NBSP: however, if the stock market can teach us anything about today's markets, playing devil's advocate is just not fashionable. We expect that these common drivers will continue to drive capital to shelter itself from negative real yields in both risk assets and real assets, and therefore, we argue that money managers need not be concerned about trading gold in a risk-on environment, analysts at TD Securities argued. NBSP gold levels in the above chart, we can see that the 23.6% Fibonacci lines up with the prior resistance structure on the monthly chart. A daily analysis also shows this is a key level for which the 78.6% lines up. NBSP overview: today last price 1936.8, today daily change 35.64, today daily change percent 1.87, today daily open 1901.16, NBSP trends daily SMA 201810.85, daily SMA 501762.86, daily SMA 10011708.41, daily SMA 20011617.96, NBSP levels: previous daily high 1906.68, previous daily low 1881.52, previous weekly high 1906.68, previous weekly low 1805.86, previous monthly high 1785.91, previous monthly low 1670.76, daily Fibonacci 38.2%, 1897.07, daily Fibonacci 61.8%, 1891.13, daily pivot point S1 1886.23, daily pivot point S2 1871.29, daily pivot point S3 1861.07, daily pivot point R1 1911.39, daily pivot point R2 1921.61, daily pivot point R3 1936.55, NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. USD JPY Outlook bears pressure, pivotal support at 104.18, break of which would risk drop to 2020 low. Analysis: http ntvforex.com. News ID F05E01918 2022 p.m. The dollar holds firmly in red vs yen for the fifth straight day and on track for a weekly fall of approximate 1.6%, the biggest weekly drop since the second week of June. The dollar suffered from dovish Fed, NBSP risk mode and downbeat US data that point to a slowdown in economic recovery. Bears pressure Julia's low at 104.18 after generating strong signal on Thursday. AS close below 104.86, Fibo support 76.4% of 104.18, 107.04 ascend. The downtrend could accelerate on firm break of 104.18, trigger that would unmask 2020 low at 101.18 March 9. Firm bearish setup of technical studies on daily and weekly chart supports NBSP bears as this week's massive bearish candle is expected to weigh on the action next week. Oversold daily techs warn that bears may take a breather in coming sessions, with upticks to provide fresh selling opportunities while capped under barriers at 105.2030 zone. Res 104.86, 105.03, 105.28, 105.59, sup 104.18, 103.51, 103.09, 102.41. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. The 2020 Presidential Election September Update Analysis http://ntvforex.com News ID 9EB38918 29:54 p.m. Executive Summary. The race for control of the White House has tightened somewhat, as Joe Biden's lead in most polling averages has declined moderately from its summer highs. But, with roughly a 6-point lead according to the Real Clear Politics RCP national polling average, Biden still appears to be in the driver's seat. As of this writing, predicted betting markets imply Joe Biden has roughly a 59% chance of winning, while 538's model is more bullish on Biden, giving him a 76% chance of winning. It is perhaps worth remembering that even if Biden has a 76% chance of winning, Trump's 24% probability of winning the election is about the same odds as flipping a coin twice and getting heads both times. While unlikely, that is far from a 1 in a million event. Of course, President Trump could chip away at Joe Biden's lead in the remaining weeks of the campaign. And furthermore, we do not believe President Trump needs to pull even in the national vote to win the election. Indeed, he won the 2016 race while losing the national vote by about 3 percentage points. In 2016, key swing states like Pennsylvania, Michigan, Wisconsin, and Florida voted roughly 3-4 points to the right of the nation, helping to swing the Electoral College to Trump despite his popular vote loss. As things stand today, a 2016-sized polling error in these key swing states would still yield a Biden victory, holding the rest of the electoral map from 2016 constant and using the current RCP polling average for each state. But the election is not being held today, and circumstances could change significantly in the weeks ahead. As always, we will continue to keep our readers informed of the latest developments, and in our next piece we will compare some of the key economic policy proposals of the two major party candidates. Biden maintains the lead, but will it hold come Election Day in mid-July? We published a summer update on the state of the 2020 U.S. national election. At that point in time, Democratic nominee Joe Biden had about a 9-point lead in the RCP polling average. In the key swing states of Wisconsin, Michigan, Pennsylvania, and Florida, Biden's lead ranged from 5.2 in Florida to 7.5 in Michigan. Fast forward to today and the race has narrowed somewhat. At present, Joe Biden's lead in the RCP national polling average is 5.9, a tightening of a few points relative to his summer highs figure 1. At this point in 2016, the race was actually polling quite closely, with Hillary Clinton up just 1.5 on September 18 figure 2. We continue to be struck by the relative stability of 2020 polling. As can be seen in the two charts below, the 2016 race was marked by considerable swings over the course of the year, oscillating between periods where Hillary Clinton polled well ahead of Donald Trump and periods where the race appeared tight or Trump even had a small lead. Contrast that with 2020, where Joe Biden has led pretty much the whole year by a decent margin. Source: Real Clear Politics and Wells Fargo Securities. Of course, President Trump could chip away at Joe Biden's lead in the remaining weeks of the campaign. As we noted in our previous report, Donald Trump closed well in 2016, cutting Hillary Clinton's national polling lead in half in the final weeks of the campaign. Exit polls also provided additional evidence that Trump won a majority of voters who decided in the final month of the race. And furthermore, we do not believe Donald Trump needs to pull even in the national vote to win the election. Indeed, he won the 2016 race while losing the national vote by about 3 percentage points, in line with the RCP polling average on election day. In 2016, swing states like Pennsylvania, Michigan, Wisconsin, and Florida voted roughly 3-4 points to the right of the nation as a whole. Thus, if 2016 is any guide, Donald Trump could be within striking distance of a win even if Biden is polling 3-4 points ahead at the national level. Furthermore, although the polling at the national level proved to be fairly accurate in 2016, there were some polling issues at the state level, particularly in Wisconsin and Michigan. These were two states that were generally considered fringe swing states at best. Prior to 2016, no Republican presidential candidate had won Michigan since 1988, and a Republican candidate had not won Wisconsin since 1984. This led us to ask a question: what if the key swing states see a polling error about the size of the ones that occurred in 2016? What would that do the electoral map? Holding everything else equal. Source: Real Clear Politics and Wells Fargo Securities. Figure 3 looks at the 5 states in the 2016 election that had the closest margins and were won by Donald Trump. As can be seen in the third column, the polling errors seen in these 5 states varied significantly. In Wisconsin and Michigan, the errors were fairly large at roughly 7 and 4 points, respectively. In contrast, the Florida polling was fairly accurate, and in Arizona Trump actually slightly underperformed the polls. The far right column in Figure 3 shows the current RCP polling average as of September 18. As things stand today, a 2016-sized polling error in each of these 5 states would lead to Biden winning all but Wisconsin. Holding the rest of the electoral map from 2016 constant, that would yield the hypothetical scenario seen below in Figure 4. Source: Wells Fargo Securities. While this should probably be considered encouraging news for Joe Biden, the race remains far from a slam dunk for the challenger. Although we do not consider it especially likely, it is certainly possible that state-level polling errors could be even bigger in 2020. Alternatively, and perhaps more likely, the race could tighten a few more percentage points in the weeks ahead. A few more points of tightening and a fairly normal-sized polling error in some key states could very well put Donald Trump on the road to another narrow victory. As of this writing, predicted betting markets imply Joe Biden has a 59% chance of winning, while 538's model is more bullish on Biden, giving him a 76% chance of winning. It is perhaps worth remembering that even if Biden has a 76% chance of winning, Trump's 24% probability of winning the election is about the same odds as flipping a coin twice and getting heads both times. While unlikely, that is far from a 1 in a million event. One final point we believe it is important to keep in mind is that polling errors can swing both ways. In 2012, for instance, the race appeared quiet close on election day, with the Real Clear Politics national polling average showing President Obama up just 0.7 over Republican candidate Mitt Romney. Many political analysts projected a fairly close race in both the popular vote and the Electoral College. President Obama went on to win fairly comfortably, winning the popular vote by about 4 percentage points and winning the Electoral College 332-206. We remind our readers that there is always the possibility that the polling error could swing back the other direction and understate Joe Biden's support. Congressional Outlook. What about the outlook for control of Congress? For a description of what each party needs to either retain or capture the House Senate, see our mid-July report. In short, the polling has improved a bit for Republicans here too, though in an absolute sense it still remains fairly favorable for the Democrats. In generic ballot polling, the Democrats had an 11-point lead at the time of our mid-July update according to the RCP polling average. At present, the spread is 5.7 points for Democrats. Figure 5. This tightening makes some intuitive sense to us. The mid-July reading of 11 signaled a more favorable environment than 2008, when Barack Obama won the presidency with sizable majorities in both chambers of Congress. A spread of 5.7 is still much stronger for Democrats than what the polls signaled in 2016, where Democrats had only a slight edge on Election Day in the generic ballot. In our view, the generic ballot polling data are consistent with a race that has tightened moderately since mid-July but that remains more favorable to Democrats than the 2016 environment. Predicted betting markets give the Democrats a 56% chance of taking the Senate and an 84% chance of keeping the House of Representatives. Political analyst Larry Sabato's widely followed crystal ball projections currently rate the Senate as 49-48 for the Republicans, with 3 states North Carolina, Maine, and Iowa considered toss-ups. Of course, the race for control of the House and Senate, like the race for control of the White House, could change significantly in the weeks ahead. Download the full special reports. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Zoom zooms with Astro Power Analysis http ntvforex.com News ID D64A7D9/18/2022 28:54 p.m. Chaos Clinic for 9/18/2020 NBSP. While many stocks are being negatively impacted by the pandemic, there is one stock going up so fast that one cannot ignore it. Zoom, symbol ZM. Almost everyone now knows about Zoom, thanks to the pandemic forcing remote learning and remote collaboration. Just as COVID-19 ripped people apart, Zoom reconnected them. Timely. If that did not get your notice, the huge jump on August 31st should have. In just 24 hours, ZM jumped from near 330 to 478, a nearly 60% jump. The 3 charts above show what's happening. At the beginning of 2020, ZM was about 72. Then as the pandemic became a serious problem in February and March, prices moved up. By mid-July prices had risen over 300%. Then the big jump in late August extended this gain to over 580%. This is shown on the top chart. Clearly there is a lot of money chasing this stock. The second chart is an 8-hour bar chart with a rainbow of EXMAs. The 144 bar is a 48-day EXMA. The 72 is 24-day, the 36 is a 12-day, the 18 is the 6-day, and the 9 is the 3-day. After the big jump, the pullback was only to the 6-day. The slope of that EXMA remains up, suggesting continued rally. Another thing to note on this chart are the support and resistance near 240, 300, 360, 420, and 480. These are all key aspects of the wheel of 360 running on the 6th harmonic. This indicates a stock with a very energetic behavior. So a look at its natal chart is warranted. The first trade natal date of ZM is 3/22/2019. This was a clever choice, since the spring equinox is the start of the natural year. On ZM's natal date, the Moon, Venus, Jupiter, and Uranus filled 4 corners of a hexagon, hence the 6th harmonic behavior. It's the 6th harmonic that forms snowflakes. Off that same natal moon the node, Uranus, and Saturn-Pluto form a square. That square provides the capability for ZM to frequency double, because it divides 2 of the hex sides in half. This gives ZM the ability to make chaotic moves. An example of that is the third chart, showing the chaotic move of 8/31/2020. This is an ephemeris wheel showing current planets as blue lines and natal planets as green bars. It is my primary tool for studying specific events. The red arrows show the ZM price move. As the current moon conjoined natal Venus and squared natal Mars, prices jumped from natal Saturn-Pluto to natal node, which was being transited by current Venus. So that frequency doubling square was highly energized, a clear case of market astrophysics in action. Whoever set the first trade date for ZM knew what they were doing. So ZM is not only a right stock at the right time, but one that is built to be a rocket. Understanding its structure helps evaluate it as an investment. To me, it looks like a stock to consider buying on DIPs. The natal hex gives seasonal energy points near 215, 411, 616, 819, and 1016. Watch these dates for returns. Use the rainbow of EXMAs to help find the DIPs, and to set stops. It may also be useful to get an XGO energy chart for Zoom. NBSP. This content was published on Dr. Al Larson's NBSP Chaos Clinic NBSP, which you can attend each Friday for free. Dr. Al Larson has developed a complete chaos model of markets, 4 unique courses that let you become a certified chaos trader, some very unique e-mylar fractal pattern overlays, and tools that permit forecasting individual stocks and markets years in advance. You can also sign up for a free weekly email, and attend a free chaos clinic on Fridays. To learn more, click on the author's profile. Be sure to sign up for the free weekly email NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Bitcoin price analysis. BTC USD continues to search for direction near $11,000. http ntvforex.com. News ID 983F541. Minutes ago, Bitcoin is moving sideways for the third straight day on Saturday. $11,200 as a critical resistance in the near term. Selling pressure could pick up steam with a break below $10,700. Bitcoin BTC USD closed the previous trading days virtually unchanged near $11,000, and DOZNT seem to be looking to make a decisive move in either direction on Thursday. As of writing, Bitcoin was down 0.35% on a daily basis at $10,900. BTC USD technical outlook. On the daily chart, the relative strength index RSI indicator continues to move sideways near 50, confirming the indecisiveness of Bitcoin. On the upside, $11,200 area, where the Fibonacci 38.2% retracement of July 21 August 18th uptrend and the Fibonacci 61.8% retracement of the early September drop is located, aligns as a critical hurdle. The 50-day SMA is also fortifying this resistance. With a daily close above this area, the next target on the upside could be seen at $11,700. Fibonacci 23.6% retracement of July 21 August 18th uptrend and $12,000 psychological level. On the other hand, the initial support is located at $10,700. Fibonacci 38.2% retracement of the early September drop. 20-day SMA ahead of $10,400. 100-day SMA. Below those levels, $10,000 psychological level is defending $9,800, the static level that helped Bitcoin reverse its direction after the sharp sell-off witnessed during the first week of September. Bitcoin chart daily. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Ethereum price analysis. ETH/USD could push higher with a daily close above $400. http ntvforex.com. News ID 663C972. Minutes ago, Ethereum is posting modest daily losses near $380 on Saturday. ETH/USD could gather bullish momentum with a daily close above $400. Ethereum ETH/USD climbed higher toward $400 on Thursday but lost its traction and closed in the negative territory on Friday. On Saturday, the modest bearish pressure on ETH/USD remains intact and the pair was last seen losing 1.45% on a daily basis at $380. Ethereum technical outlook. An ascending triangle seems to have formed on Ethereum's daily chart. This formation is usually considered to be a bullish NBSP pattern when it's seen within an active uptrend. Although this is not the case, the resistance line of the triangle seems to be coinciding with 50% Fibonacci retracement of early September drop and the 50-day SMA, suggesting a break above that level could open the door for additional gains. $420 Fibonacci 61.8% retracement could be seen as the next target. On the downside, the initial support aligns at $375 Fibonacci 38.2% retracement ascending line of the triangle. If Ethereum retreats to this area and confirms it as a support, it's likely to retest $400 in the near term. Below $375 the next support could be seen at $350 Fibonacci 23.6% retracement. USD Daily Chart. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold price analysis. XAU/USD could extend downward correction below $1,925. http ntvforex.com. News ID 2-day 8C 2 minutes ago by Aaron Sengezer. XAU/USD failed to make a decisive move in either direction this week. $1,925 aligns as a critical support for gold. The descending triangle on the daily chart points out to a bearish outlook. The troy ounce of the precious metal fluctuated in a relatively tight range throughout the week and closed with a gain of $10 at $1,950. NBSP Gold Technical Outlook $1,925, Fibonacci 23.6% retracement of the uptrend that started in late March and ended in early August, has been tested numerous times in the past few weeks and seems to be holding bears in check. However, the descending triangle, which is a bearish pattern, NBSP that can be seen on the daily chart, is using that static support area as its bottom. Additionally, the 50-day SMA is staying relatively close to that level, confirming its significance. With a daily close below $1,925, XAU/USD could extend its slide toward $1,900 psychological level August 26 low and $1,860 August 12 low. On the upside, the near-term outlook could turn bullish with a decisive breakthrough $2,000 psychological level. Ahead of that level, $1,975 September 16 high could be seen as an interim resistance. Gold Chart Daily NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.